there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Friday. In today's program, I want to discuss two very surprising earning reports which was released late last night, plus go over an ongoing debate which is going back and forth, which can potentially affect the market. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So starting off with earnings, we had two big earning reports yesterday of two of the biggest companies in the world, and both surprised the market, but in a good way. First of all, Apple came out. They beat revenue expectation, okay, by by a fair bit. Their expectation, their actual revenue was announced at 83 billion versus 82.7 billion expected. Apple stocks on the back of this announcement actually went up more than 3%. Now, the main revenue for Apple, surprisingly, is their flagship iPhone. And iPhone revenue, despite the current climate we live in with extremely high inflation, was announced at 40.7 billion versus the 38.9 billion expected. However, though these are very, very good numbers, still very impressive, Apple's overall net income fell by 10.5% year over year, which is not surprising because they have faced a number of key issues, such as, obviously, like I said, rising inflation, which should technically affect the purchases of their flagship products. And obviously, COVID lockdowns in China, which has greatly affected their production. But anyway, either way, is a big surprise for the market. Bear in mind, we have had some very disappointing figures and very doom and gloom reports from other big retailers. So this is still a quite surprising result, and it has boosted the market a little bit. Amazon also came out yesterday, and their stock soared nearly 12% after their revenue beat expectations. Their revenue was announced at 121.2 billion versus 119.53 billion expected. This is what they had to say. This is CEO Andy Jassy. Jassy? It's a surprising name, isn't it? He said, despite continued inflationary pressures in fuel, energy, and transportation costs, we're making progress on more controllable costs we referenced last quarter. So there we go. Both two very good results for two of the biggest companies in the world. And that leads me on to the question, recession. Are we really in recession? As you know, yesterday, US GDP was announced negative 0.9%. That's two quarters in a row, both with negative outcomes, negative readings, which technically is a recession, or a technical recession. But the recession debate continues. It continues. Janet Yellen, Treasury Secretary, okay, she said yesterday that the US economy is in a state of transition, not recession, despite the GDP result. Transition, that was the word. This is what she said. When she was asked the question, are we in recession? And she said, that is not what we are seeing right now. Not what we're seeing right now. She went on to say, when you look at the economy, job creation is continuing, household finances remain strong, and consumers are spending and businesses are growing. Okay, indeed, Apple and Amazon have very good results, don't forget. But when they go on about businesses are growing, don't forget, both those companies have talked about cutting hiring in the next quarter. So they're worried about growth. But anyway, she went on to say, obviously she represents the Democrats government, the administration. She also then went on to boast about the lists of the administration's economic accomplishments, including non-farm payroll growth of more than 9 million. And like I said yesterday, you're going to get this debate. If it's very political. If you're a Republican, you're going to say, we're in a recession. If you're a Democrat, you're going to defend and say, no, we're not. We're not in a recession. So anyway, the debate continues. Is this a real recession or not? How's the market reacting to all of this, though? Like I said yesterday, bad news remains good news. The market is still very bullish on the back of that number yesterday. Like I explained yesterday, the reason why the market is acting in this way is because they believe, because of this negative number and what Powell said on Wednesday, they think that the Fed is going to be less aggressive with interest rate hikes, which means the market can take it. So this is why we've seen slightly weaker dollar across the board and a bit of bullish momentum. But let's have a quick look at the market as it stands. Let's start off with the euro. You all know my opinion on the euro at the moment. As you can see, the euro has had a little bit of a boost. Yes, we're facing a little bit of selling at the moment, but still had a boost on the back of that US GDP reading, and obviously the change in mood of the current change in mood in the market. Currently trading at 1.02233. The sterling, okay, very similar story. Had a boost, temporarily went over that key level of 1.2197. Currently testing that level at the moment. If you look at the dollar yen, this shows a totally different story. Again, because don't forget, we've been looking at a lot of dollar weakness, dollar strength, against the Japanese yen. As you can see, it's now under pressure against the yen on the back of that GDP result, currently trading at 132.869. Look at the S&P 500. Yes, okay, again, acting in a bullish behavior, way above the 4,000 point level now. Like I say, the market has got this sort of this feeling that the Fed's going to be light on the back of this GDP number, currently trading at 4,100 points. And finally, gold, currently trading at $1,765. Next key level I'm keeping an eye on, if it can maintain this bullish momentum, is $1,791. That's another key level. Like I said the other day, and I've said before, I think gold's going to really get its shine back the more we have talk of recession and the more negative economic data we're going to get. That's where it's going to get its safe haven status back. So keep a close eye on the yellow metal. Okie dokie. What else? Okay, don't forget, in about 45 minutes time, I'll be going back online because I'll be doing a tixee live watch along of the EU CPI. The EU GDP comes out at the same time, so I will be talking about that as well. So please come and join me at 8:50 a.m. UTC to talk about the EU CPI as it comes out and look at the impact that might have on the market. So please come and join me for that. As the market stands, the FTSE is currently trading at negative 0.51%. DAX currently trading at 0.77%. Eurostoxx 50 currently trading at negative 0.24%. That's a good question, Philip. What do you think the tipping point would be for a recession to be announced? That's a very good question. Job market. For the US, it would be the job market. Soon as we start seeing a serious slowdown in the NFP number and a rise in unemployment, that is when they cannot deny that the US is in recession. It's going to be about the labor market. At the moment, they're using the labor market as a defense mechanism to say they're not in recession. But as soon as we have that issue, that starts to slow down, then they cannot deny it anymore. Simple as that. The other thing I think, Philip, which could be a tipping point, is the housing situation. I seriously believe the US is on an edge of a housing crisis. So when we start seeing more stories about that, then they cannot deny that we are going into recession. And Europe is going to be in a similar sort of situation as well. At the moment, it's all about the labor market. They're using that as a defense mechanism. Great question, though, Philip. Thank you so much for that question, mate. Really good question. Thank you. So anyway, like I say, back on again to talk about EU CPI, in about 45 minutes. Please come along and join me for that. Is there any other questions? Anything else anybody else like to ask me about before I go and get ready for the next broadcast in a little while? Okay, don't forget, if there is no questions, not a problem. Philip, that was a great question though, my friend. Thank you so much for that. I really appreciate that. Like I say, don't forget, if you think of a question later, jot it down in the comments below on either Facebook or YouTube, depending where you're watching me. Thank you, Philip. No, thank you, Philip. I really appreciate it, mate. Thank you. Thank you so much. Like I say, if you think of a question later, put it in the comments on either Facebook and YouTube. I will see it and I will reply to it next time I go live on air. So don't forget that option as well. Anyway, as I always say, if you're watching me on Facebook and you've enjoyed this little episode, looking forward to the watch along. Me too. Hopefully I'll get the right data source this time. Like I say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you like this episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it useful, and more importantly, put up with me and my over-the-top enthusiasm about the markets, which I just simply can't help because I love the markets, give me one of those. It's nice to know. It's nice to know that you like what I do. You're in Australia, so it would be very interesting to see what happens here as well. It will be, but like I say, the Reserve Bank of Australia has been pretty aggressive with interest rates as well, hasn't it? And I think your inflation, isn't it 6.1, I think, in Australia at the moment? So you haven't got quite the sign of stagflation like the US or Europe has. But yeah, hopefully you're right. Like I say, but don't forget the Aussie dollar is a commodity currency as well. So that may benefit if gold does start to rise. But brilliant, Philip. Thank you for the interaction. And I hope you're doing well, my friend. I hope it's all good over there. Anyway, like I say, hopefully see you in a little while. Don't forget, these little videos are for educational purposes only. Education purposes only, and in no way whatsoever should ever be taken as financial advice. If I do suggest you do your own research and do your own due diligence, and of course, know the risks at hand to entering any trade. Till next time, every single one of you, trade safe.